the best business formation for you to file as a business owner in order to make your business legit. And what do I mean by that? So you may have heard of like an LLC before. Maybe you've heard of, a corporation, obviously, and then you've probably maybe heard of partnerships. So should you, as a business owner, go set up a full-fledged corporation? Are you setting up a partnership? You do have a partner, but should you do a partnership? General partnership? A limited liability partnership? An LLC can be a partnership. Okay, should you maybe be just a sole proprietorship? You're just one person out there who's running a business. What's a sole proprietorship? What's an LLC? So let's talk about that. First, let's start with just this one person, single owner, who wants to start a business and make it legit, okay? What are their, most common decisions that they run into? Well, if you wake up one day and you just decide to go start a business and start either selling things or providing a service to people, you are running a sole proprietorship. You do not need to register necessarily any paperwork for this. A sole proprietorship is you just running a business in your name. You wake up one day and go start earning, self-employment income, getting your own jobs or selling your own products, doing whatever you're doing. That's self-employment income, and you are operating a sole proprietorship. So that is one option that you could take, but obviously you maybe have been doing that. Now like I said, you're looking to get it legit. So the most common thing that you've probably heard of is an LLC. So what is an LLC? A single owner LLC, to be specific. So really what this stands for, limited liability company. And this is pretty much just establishing a separate legal entity away from the owner, okay? When you're running a sole proprietorship, like I just previously discussed, you are running a business, as I mentioned, in your name, as in you are the business, okay? You, the person, are the business. They're not viewed as two separate things. Once you set up an LLC, the limited liability company, is viewed as separate from the owner. And the biggest thing that this does is it protects the owner from certain liabilities in operating the business, okay? Whereas the owner is not protected if they're doing a sole proprietorship. LLC, like I said, stands for limited liability company, limited liability. So in the event that, say, you're operating in this business and maybe the business gets sued, the person trying to sue you is going to have a lot harder time coming after the personal assets of you, the owner. So like they can only pretty much get the assets of the business, okay? It creates a separate entity, right? So when a customer, per se, you go there and you damage something, let's say you're a general contractor, whatever happens, and you something happens. So someone's trying to sue you, and they can only come after the business assets versus coming after your personal assets as well. Your house, right? Your personal cars, all that stuff. So that is the main reason for an LLC when you're a sole owner in running that compared to that of a sole proprietorship, because when you're running a sole proprietorship, like I said, you're not viewed as a separate legal business entity. Starting an LLC as a sole owner is not a tax move. You're not going to receive a tax benefit when you switch from a sole proprietorship to an LLC. A sole proprietorship is taxed the exact same as a single owner LLC. When you go file your LLC with the state, your taxes don't change, okay? It's the same tax situation. There's no tax benefit from going from a sole proprietorship to an LLC. It's strictly a liability move in terms of the owner's protection of their personal assets. Like I said, an LLC establishes a separate legal entity from that of the owner. So that basically is, if you're just, a sole owner of your business and you're looking to go from sole proprietorship, chances are you're going to want to just get an LLC in whatever state you're in. Okay, it's most simple that way. LLC fees are pretty low. The requirements of them obviously you need to run your company like a company, but in terms of like that compared to like a corporation or a partnership or an S corporation or whatever, it's pretty simple in terms of like filing tax returns. It's not as complex. So chances are you're just going to want to go with an LLC. Now, just to stay on the track of a single owner in their business, maybe you've done some of your own research, and maybe you've heard of something called S corporations. Okay, and before I get into S corporations real fast, I just want to let you know, you will 9.5 times out of 10, 9.9 times out of 10, you will never set up a full-fledged corporation for the business that you are running. Like, and what do I mean by a full-fledged corporation? A C corporation, like Amazon. And I'm not saying that, you can be a full-fledged C corporation without having a public stock, right? You can wake up today and go file articles of an incorporation and be taxed as a C corporation, but you will never want to do that, chances are, because you'll never want to do that. So I'm not even going to discuss C corporations, only S corporations. So maybe you're a sole owner and you've been doing some of your own research and you've heard of S corporations. All right, now one thing of S corporations is it does make you a corporation. There are certain requirements that need to be met for you to be able to get S corporation status. You can take a sole proprietorship and file directly for like corporation status and then elect S corporation status. Or you can have your single owner LLC elect to be treated as an S corporation, and then your LLC will be an S corporation. So there's two ways to go about it, and an S corporation status is an election that has to be made by the company. Like I said, there's certain requirements to becoming an S corporation. You can only have certain owners of an S corporation. You can only have a certain amount of shareholders, depending on who is, managing the corporation and basically doing all of the work of the corporation. You have to pay the officers who are also employees of the S corporation a reasonable salary on a W-2. So there are requirements to become an S corporation. So like you've heard of it, and you've probably heard about lots of tax savings and all this and all that being an S corporation. But from what I just said, where are the tax savings? So if you're just starting your business, your sales and your net income are going to sit here and go like this. Maybe not. Maybe I'm wrong. Okay, maybe you operate your business, you open up your doors, and you just got a whole bunch of money pouring in. But chances are it's going to be, pretty unsteady until you get some experience, customers calling, flowing, and start traveling down your business owner road. So yes, an S corporation could save you in taxes compared to that of just being a sole owner in an LLC. But, however, electing S corporation status should probably come when the business has a high amount of business profits, okay? Otherwise, it's not necessarily all worth it to go through the hassles of being an S corporation compared to that of a single owner LLC. The tax savings on it require a high level of business profits. Basically, the higher your business profits, the more worth it is for you to elect S corporation status. And when I say high business profits, I'm talking in the $70,000 to $80,000, $90,000 range before owner pay. Okay, before owner pay, I'm talking somewhere in that neighborhood. All right, and it's obviously it's a big debate amongst accountants because, like I said, there's that reasonable salary requirement, and that is where the IRS gets theirs in terms of taxing the owner of S corporations, because it's more beneficial for the owner of an S corporation to take a distribution out of their company than it is for them to get paid on the reasonable compensation. So the IRS is going to come in and try to argue a higher salary for whatever you're paying you as the officer of the corporation who's doing the work in the corporation, right? They're going to say, well, you need to be paid more. You shouldn't be getting paid 30. You should be getting paid 60 grand here on a W-2. And then they'll that's where they get you. So the tax savings is having the higher the business profit in the business, then you'll want to start looking into getting an S corporation status. And I would say that it's different for everybody, but I would say that number is somewhere in the neighborhood of $70,000 to $80,000, $90,000 in business profits before owner pay, in which you, as the single owner of the LLC, will want to start looking into electing and being treated as an S corporation. Otherwise, it's not necessarily worth the hoops. The tax savings of electing S corporation status won't be there if your business profits are low and you are not able to work how an S corporation works differently compared to that of an LLC and save in tax. So that is when, that's pretty much the roadmap for a sole owner in a business. Is you are going to go, sole proprietor, you're just starting your business up, you just woke up one day and like, okay, let's get this thing going. Then you want to get legit. Chances are you're just going to want to get a single member LLC. Then once it grows, you're going to start wanting to look into electing S corporation status once those business profits rise to a certain level. So now let's bring in a partner, another owner of the business, okay? Once you bring in another owner of the business, the first thing, so let's start kind of where we did for the single owner. You and somebody else wake up one day and you guys just start, conducting business things together. You guys, maybe you guys are a team of general contractors. You wake up and you both are operating a business, right? Kind of like how a sole proprietor would, right? By themselves. They just woke up one day, started generating self-employment income. Let's say two people do that together, right, from the start. You have, and coincidentally, a general partnership with no paper filings. You don't have to register this with anybody, just like you don't have to with a sole proprietorship. You and two people wake up one day, you start doing business stuff, generating income. You guys have a partnership on your hands, a general partnership. Just like the owner of a sole proprietorship, the owners of a general partnership are liable for all things business related in the business. Like lawsuits, they have the same liability as a sole proprietorship described in the beginning of this video. But one thing is that the tax treatment of partners in a general partnership is a lot different compared to that of a sole proprietorship. And this is where kind of running a business with another person becomes somewhat of a hassle because if you do nothing, you're going to be taxed as a general partnership. And a general partnership files its own tax return in some sense on a Form 1065, and it's somewhat taxed in a similar sense to that of an S corporation, but it's not. So yeah, when you bring somebody into a business with you and you have co-ownership going on, it gets a little bit annoying fast. Because like I said, no matter what, you're instantly taxed as a general partnership, and then you have to deal with the tax rules of running a partnership. These businesses, a general partnership files its own tax return, kind of, on a form called a 1065, which is filed separately away from the individual owner, whereas a sole proprietor and a single owner LLC, your business stuff is right attached with the individual tax return, your individual tax return. But there is like totally different rules for the taxation of partnerships. So you're either going to elect nothing at all when you and another person share ownership in a business, and you'll be taxed as a general partnership, or you can file the legal documents and run a general partnership. But like I said, the key thing as to why a general partnership isn't ideal is because you have the same personal liability that a sole proprietorship has, in the sense of like you are liable for all things related to that business, the liabilities of the business and any lawsuits that can come about in conducting and running that business. So what are you to do then? Go elect S corporation status? No, I mean, because then you have to meet a whole bunch of other requirements, kind of like I explained earlier in this video. So one thing that you can do, and one thing that's actually a really common form of a partnership is you can just be a multi-owner LLC. Owners of an LLC are called members, so I may interchange that lingo in this video throughout, but I'll try to be consistent. Anyways, you can be a multi-owner LLC, and then a multi-owner LLC is taxed as a partnership. A lot of people do kind of get this confused because, you know, a single owner of an LLC, like I said, the tax return is no different than that of a sole proprietorship. But if you're running an LLC and you bring in a partner, or if two people just from the beginning own a percentage of the LLC, then you're taxed as a partnership. Okay, that can be a common mistake that a lot of people make, so just be aware of that. But you can run a LLC with a multi-owner, and then you're taxed as a partnership. So you can create that legally separate entity, but just know that you're going to have different rules to that of running it as a sole proprietor LLC. So that's actually a really common way that you'll want to go about it. Another common thing that you might have heard of too is an LLP. This is a limited liability partnership. Now, these are pretty similar to that of an LLC. And what it comes down to really is it is somewhat of a state-by-state thing. For instance, like accountants in certain states, or attorneys, or sometimes doctors, lawyers, are not allowed to just go set up a general LLC. They're only allowed to set up an LLP. And it just really kind of has to do with, you know, member management and how the owners of the business want to be treated, right? So like in a limited liability partnership, you can start getting into like limited partners in which you're the owner, but you're a passive owner. And then you can have a general partner in a limited liability partnership, and that is an active member in the partnership who runs things. And, you know, so there's not, we won't get too wrapped into that. But just check out, depending on what business you're opening, you know, just maybe you'll have to take a look at what your state says about the difference between an LLC and a limited LLP, a limited liability partnership. But to try not to go too far down that rabbit hole, most people who are running a co-owned business will just want to, again, set up an LLC. This is why they're so common, is because even if you're just a sole owner or a multi-owner, the fees are the same, and they're just the easiest to set up. And then they're cheapest. And for sole owners, there's a lot less tax reporting requirements. For multi-owners, you are taxed as a partnership, which has a higher burden of tax reporting requirements for that business. Now, as a co-owner, you can also set up yourself as an S corporation. And if you are a co-owner or a shareholder that you would be in an S corporation, you still have to follow those same rules and requirements that a single owner / shareholder in an S corporation would have to follow. You can only have certain shareholders in an S corporation. You know, the reasonable compensation requirement. A certain amount of shareholders. For instance, you can have, depending on what your business is and what your plans are in the future, you can have, for instance, of an LLC and a partnership, you can have 150 different partners and owners of an LLC. But for an S corporation, you can't have any more than 100, okay? And obviously that's a really high number, but the reasonable compensation requirement is still there. And unfortunately, you know, the rules and requirements of running an S corporation are a little bit more burdensome even compared to that of just a partnership. So again, it kind of just follows that same trajectory of being a sole owner. As a partner in whatever company you're in, or an owner of an LLC, whatever you want to call it, you're going to kind of start, you can just accidentally start as a general partnership, just like you can accidentally start a sole proprietorship. General partnership kind of sucks because you have a higher burden of reporting requirements in terms of taxes. But you can start as a general partnership, then you can do an LLC, and then you'll be taxed as a partnership, but then you give yourself that separate entity, just like you would as a sole owner. The tax differences between a general partnership and a normal LLC are no different. They're pretty much the same. because a multi-owner LLC is taxed as a partnership. So, and then as your business grows, as business profits rise to higher levels, that's when you can maybe start discussing electing S corporation status. And for you guys out there who are into rental real estate, you will probably never set yourself up in an S corporation, because like I said, there's a certain tax savings of an S corporation in which there isn't that tax savings when you're dealing with rental property and rental income. Because the tax savings of an S corporation comes from self-employment tax, which is considered, self-employment income, self-earned income, and rental income is not considered self-employment income, so it's not subject to self-employment tax. So that's where I said, like, the benefit of becoming an S corporation is when those business profits get high, because then when you choose on how to pay yourself as the owner, you can push more of the S corporation profits to the bucket of where you can avoid that self-employment tax on the self-employment earned income, right? So that's when you would want to make that switch to an S corporation. But if you have a rental real estate income, you'll probably never elect S corporation status.